It has been 15 years since Google went public. The company started trading at $85 a share. Since then, the stock has surged more than 2,600%. And as Josh Lipton reports, that's due in part to its acquisition strategy.
A $1,000 investment in Google at the time of its IPO would now be worth about $28,000, in part because of its major acquisitions. There's YouTube, which the company bought for more than $1.5 billion in 2006. The video streaming powerhouse now generates an estimated $20 billion in ad revenue per year. There's also DoubleClick, which it bought for over $3 billion in 2007. That advertising platform helps power Google's ad business, which still accounts for the vast majority of Alphabet's total revenue. But its biggest acquisition so far, more than $12 billion for Motorola Mobility in 2012. Less than 2 years later, it sold Motorola's smartphone business to Lenovo for just under $3 billion, but Google did get to keep most of Motorola's portfolio of mobile patents, offering the company legal protection for its Android operating system. To date, Alphabet has spent over $32 billion on acquisitions, 40% more than Amazon, almost 500% more than Apple. But what about the quarters and years ahead? Some analysts think increasing regulatory scrutiny, both here and abroad, will hamper Google's ability to do some deals.
Them attempting to do a large 10 to 20, $30 billion acquisition, a vertical integration acquisition in the internet advertising space, off the table. Twitter, Google for Twitter, off the table. And the reason is the concentration, the large market share they already have in online advertising. Google accounts for, close to 50% of internet ad spend in some markets. It just wouldn't be allowed, they wouldn't be allowed to increase that share.
Mahaney does think Google can still do relatively smaller deals to build out its growing cloud business as it looks to close the gap with industry leaders like Amazon and Microsoft. In fact, Google's new cloud chief has already made it clear that acquisitions will be an important part of his strategy, recently announcing that Google will buy a data analytics company called Looker for nearly $3 billion. For Nightly Business Report, I'm Josh Lipton, San Francisco.